Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to make $10,000 per month from swing trading stocks. We're going to be talking about tips and tricks and techniques that you guys should be doing for your swing trades. So I hope you guys all enjoyed this video. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. It's the Swing Trading Masterclass. We have private live streams, we have quizzes, we have lectures, a group chat, everything you guys need to get started with swing trading, whether you're a beginner or you're already an advanced trader, just learning and wanting more strategies. Check it out down below. And we're doing an amazing holiday sale, a Halloween sale, code Halloween for 50% off. So sign up, click that link, and I'll see you guys in there. And guys, let's jump into this. So we always hear that expression, right, that people say is, I need to make $10,000 a month from trading. I've heard it so many times. Maybe it's just me, but almost every day on my channel, I hear somebody comment that. And so I wanted to talk about how to actually do that. It's very, very common that I get asked that. So the first thing that I would recommend if you're a brand new trader wanting to make $10,000 a month is stop. Stop right now. Don't even put a number in the air and focus on one thing. As a beginner, you need to focus on learning. You need to learn as much as you can. The more you learn, the more you're going to earn, and that's completely true. So if I were to start over, what I would actually do is paper trade. I would open up an account with Moomoo, which is a trading broker that I love. They're fantastic, offering good charting scanning for technical analysis, and it's a broker for traders. I'll put it down below for you guys. Sign up, 20 free stock. But more importantly, they offer paper trading. Paper trading is using simulated money to practice your entries, your exits, your risk management skills. And what this does is it helps you build confidence, and two, it helps you understand what works for you and what doesn't work for you. During this time here, what you're going to want to do is actually journal down your trades. You're going to want to see what's working, what strategies are working, so you can implement that for future trades. So this is the journal I use. I love it. I'll put it down below as well. You guys can get it right on Amazon. It's called Mastering the Swing. But you don't need a dedicated trading journal. I recommend it, but you could use like a 99-cent journal from the dollar store. But what you want to do is you want to track everything. So this could include your emotions before you bought it. Were you emotionally strong? Were your friends telling you to buy it? Describe the setup, write out your checklist. This is crucial because you want to figure out what's working and what's not working. So I would recommend paper trading and journaling for at least 6 months to a year. After that span, then you can start small with a small account with like $100 or $200, and now continue to journal, but practice your entries, your exits, and continue to evolve with real money. Real money is completely different than using fake money. And the biggest reason why is because emotions are crucial and very, very heavy when you use your own money, because the stock you buy, you could think it's going to $1 billion, and then you could dip down and you don't have a plan, so you sell it and then it rallies up. So, the second phase is just starting small and trying to grow a small account, and continuing to journal, continuing to work and see what works well for you. So after that span, then you can go a little heavy, but in order to make like $10,000 a month, you can't have $100 in your account. You do have to have a little bit of a larger account for that. And so let's jump into kind of the strategy here that I've used and that I would highly recommend using here. So this is the broker Moomoo. I absolutely love them. They're literally fantastic. But more importantly here, why we bought them, why I use this is because they offer really, really good charting here. So let's show you guys my little trading journal here. I have an Excel sheet as well, and all the course members have access to this here. So this past week here, we were up about $4,100 on the week, which is definitely one of our largest returns in a single week. And you guys can see it was led by Tesla with $2,500 here. The rest was $1,300 and 210. But more importantly here, why we bought these positions is because it followed our checklist. Having a checklist is very, very important for your trades because it really helps you narrow in on stocks with your criteria that meet your strategies, that meet your approach. So let's talk about some of the stocks here. We'll obviously talk about Tesla first because it was the largest gain of the week here. And the reason why we bought it here is you guys will notice it has this good upward trend. Trends, in my opinion, very rarely will I ever place a trade on a downward trend. I always imagine the trend of a stock is like a river. It's a lot easier to have the river at your back and swim downstream than trying to swim upstream. Now, doing this here, you guys can see it hits this line once, twice, 3 times, about 4 times, little wiggle room in there. But more importantly, it does have that good trend line here. So we took a good trade here near and around this 216 area. But more importantly, we also noticed it had heavy support here on this red line. This red line is what we call the 200-day moving average line. It's acted as support in the past where it hit it and we had that good move. So it sold off and it was pretty much consolidating here. It sold off in here due to a event that Tesla had, and it was a robo-taxi event. Often with investing and trading, anytime a stock sells off because of an event or something like that, any action in the market is often an overreaction. So we got in for a possible reversal. Now the stock squeezed up. Very rarely do I ever hold a stock through an earnings, but we decided to go, okay, well, the stock has heavy support here on the hourly, so we could still set our stop loss just below it at like 208 for a possible push up to resistance at like the 260 range. So doing that here, and this is why, guys, I love Moomoo, is because doing this gives a risk and reward. Let's go ahead and draw it out of about 6 to 1. So risking $1 to make over $6 a share. But why did it get so much buying pressure? Is because they had some good earnings. This stock easily could have went the other direction, and I was well aware of that. And that's the thing. If you're a new trader, new beginner, I wouldn't recommend doing and holding stocks through an earnings. I'm fortunate enough to have a little bit of a larger account where I can risk a little more money for a little bit higher returns. Especially we've had some great couple of weeks, I'm willing to risk a little bit more. So you guys can see the stock popped up and continue to rally its way up. So now the thought that I have with Tesla is very, very simple. We're just going to keep our stop loss just below here in like the 260 range. So if it does dip down, we'll just take our profit and move on to other opportunity. And that's the thing about trading and investing. You got to have some sort of plan. And that's the plan we have here. But why we bought in with an earnings, because people are going to ask, because it was on heavy hourly support, 200-day moving average line, and we had a stop loss in place. The next stock here that we bought here was Texas Instruments. Looking at the daily chart, what do we notice? It has that good established upward trend. You guys can see the heavy support a little clearer here where it hits this several times, right? If we look at this line, once, twice, 3 times, 4 times, 5 times. So recently it sold off back down to those levels again. Also, it was at a 36 on the RSI, which is another technical indicator. And you guys can see the last time it was trading for that was back in here where we had this good move. Previous to that was in here. So now we could enter with this trade near and around. Actually, what we did, let's go to the hourly. You guys can see it a little better. You guys can see that huge breakout here on that trend. That was the huge indicator why we got in. But we entered near and around that $200 level where it kind of curled down, hit that 200-day moving average line. So now what we did here is we set our target price up at resistance, that 211 area. We set our stop loss just below it at near and around, the 197 area, risking about 1.5% to make about 5%, which would give a risk and reward of about 3.7. So having good risk and reward, and guys, this is super, super important here, is having good risk management. And I want to show you why. Let's go ahead and pull it up here. So if you guys were starting out here with a small amount of money, whether it's $500, $1,000, or whatever it is, and imagine over the course of a year, maybe you take a trade a week with 52 trades. If that just say you risk 2%, which is average, in this stance here with this stock, we risked about 1.7%. So, but I will say most of the time it is about 2%. So the risk and reward is about 3.7. We'll round up a little to 4. And our win-loss percent, when you buy a stock, it's pretty much a 50-50 chance of making money. When you calculate this out here, over the course of a year here, your end balance would be near around $2,000, which is astonishing. And the reason why that is because you're risking money for high returns. So you're risking $1 to make over $4. So with these types of trades, you could be wrong, 3 times and still be profitable on the trade here. And you guys can even see where it has some bad trades, and then you get those good ones. Trading is like, it's like a roller coaster. You'll have good days, you'll have good weeks, you'll have bad days and bad weeks. But what makes a successful trader successful is just being consistent, being willing to take profit at 1 to 3% and just understand the long-term outlook for your trading. So guys, I hope you guys all enjoyed this. More importantly, I hope you learned something. If you did, hit that like button, subscribe, and we'll see you guys in the next one. Hope you guys have a great rest of your day, and take care.